Agenda. Can I get a motion on this one? Councillor Rose? I should actually add that I'd like to add the budgeting webinar to the agenda. Just a quick discussion. We'll call it a 10A budgeting webinar. Because it's on the 30th, just wanted to chat about it. It's time sensitive. Anything else? Seeing none, all those in favor? Okay, the agenda is carried. No scheduled delegation other than we'll have you guys get started in just a minute when we're going over our financial audit. We'll get you there. Any unscheduled delegation, Chris? Nope.
No, I'm quiet tonight.
Oh, okay.
So far.
So far, all right. So we'll move on to our meeting minutes. Can I get a motion there? Everybody's down. Okay, I'll make a motion that we adopt our minutes from the September 8th meeting. Is there any changes or alterations that you guys noticed? Seeing none, all those in favor? It is carried. All right, and then we're going to get to the important one as our audited financial statement, and we'll start with a motion here so that we can start talking on it. Councillor Courtland.
The council approved the 2019 non-consolidated and consolidated financial statements as presented.
Okay, thank you. And just before we do this, I'm just going to make a little statement just so that we're clear, because I know we have lots of questions on our, I guess, not so much on this budget, but previous year's budget, and we have some questions. And so when we're having those discussions, if we can keep it out of camera, but also keep the privacy of everybody's name and everything confidential. Let's do it that way if we can. If we're not able to do that, then we can move into camera to have those discussions. But, you know, for example, instead of giving a name, we can say, you know, administration didn't do what we wanted or something, as opposed to giving any names, right? We don't want to be giving out names and protecting them. So we can start with that, and if it's not getting us the answers that we're looking for, then by all means we can move into camera and have those discussions. Would that work for everyone? Okay. But we'll start with our 2019 budget. And then we'll sort of go back afterwards because we still have some questions on the other one, and I'm sure those will come up on the 2018 and why we didn't get some of the answers that we were hoping to get there. Okay, so I'll turn it over to you.
All right, well, good evening, Mayor Panasic, councillors, everyone. I hope everyone's been safe during this pandemic that we've been facing. My name is Noel Chin. I am the partner for the town of High Prairie. This opportunity, I'd like to also introduce my colleague here, Brian Law. He was the audit manager for the 2019 audit for the town. So our objective here is to, I guess, provide you an audit findings report with regards to 2019 audit financial statements. I want to make it clear too, Mayor Panasic, you indicated that you want to talk about the budget. You know, we're here to talk about the audited financial statements. So with regards to questions about budget, that might be something I'm not too sure if we can answer.
No, yeah, you're right, and I shouldn't have said the word budget.
Okay,
it's on the past audits and
Perfect.
the findings that we were hoping for some information that we didn't get.
Sure.
And we've chatted about that already.
100%.
Yeah.
Okay, so on page here, on the executive summary here, the purpose of this report here is to communicate clearly with council our responsibilities in relation to the financial statements.
That's good.
to obtain information from council relevant to the audit and to promote just two-way effective communication. So as of today, September 22nd, 2020, we substantially completed the audit with the exceptions of communicating to the council, the draft statements, completing our subsequent event procedures up to the date of council approval, obtaining a signed management representation letter, and also completing the financial information return. So as you guys are all aware, Municipal Affairs has extended the deadline to October 1st, 2020. So if everything goes into plan, we will be able to file defer on a timely basis. The whole key to an external auditor is to ensure that we are independent. So Appendix 1 basically confirms our independence in the sense that no one on the engagement team, including myself, has any conflict of interest with anyone on management. Okay. The auditor's responsibility. So this is a key thing that might help you guys when we are talking about prior years. Is what is the responsibility of the auditor? So the responsibility of the auditor is to provide an opinion of whether or not the financial statements are in accordance to an actual standard, an accounting standard, and our standards here is public sector accounting standards. So when we are performing our audit procedures, determining the areas of risk, it is in accordance to a specific standard of where management might have errors recording it. So on a cash basis accounting, it might be fine, but on a financial reporting standard, there might be discrepancies between cash accounting and financial reporting under a certain standard. So our standards here is Canadian Public Sector Accounting Standards. So accordingly, we performed our audit procedures to provide us reasonable. It's not absolute assurance. So we perform discussions with management, discussions with those charged with governance, with the councils. We perform sampling, such as substantive testing. We also perform substantive analytics, and these are all based on the concept of where we perceive the risk to be, under the notion of materiality as well. Okay, so the key thing here is that we're not saying that these financial statements are 100% perfect. They are reasonable to a certain extent of what materiality is, in the sense that even if, let's say, there is a $15 error, it's not going to sway council's decision when they're actually making decisions on a go-forward basis. Okay. Responsibility of management and those charged with governance. So management is still responsible for the preparation of the financial statements in accordance with Canadian Public Sector Accounting Standards. Now, as from the past, we've indicated that although we do assist management in the preparation of the financial statements, any adjusting journal entry going forward, we will confirm with management that they agree with our adjusting journal entry. So although we are preparing for it, our way to ensure that we don't have any conflict, that we don't approve these adjustments. If there's any discrepancies, we provide it to management. They will confirm whether or not they agree with our adjustments. If they agree with it, we will perform the adjustments and the financial statements will reflect accordingly. If they don't agree with it, we will then put it in a summary of unadjusted differences, which is our SUD schedule. And if the unadjusted differences gets to the point where it's larger than the materiality, that's where we will have a difference. We will have an issue in whether or not we can actually provide an unqualified opinion, which would be a clean opinion. Okay. Our audit approach of the town has been very consistent from the past. We utilize a combined approach. A combined approach is definitely a lot more efficient and effective with an organization of this size and the magnitude and the volume of transactions that occurs. So based on our understanding of the town's internal controls and processes, on an annual basis, we confirm this with management if there's any changes from our existing knowledge. And based on their knowledge that they provide to us, we will then test these controls accordingly, and whether or not we are able to rely on the controls will determine the extent of our substantive procedures that we need to do. So essentially, if there's good controls in place, we can reduce the amounts of time of testing that we need to do at year end. Vice versa, if it's not, if the controls can't be relied on, let's say for example, like this year, due to the lack of a treasurer, there might be a lack of review that's being performed. Alternatively, we might need to perform other alternate procedures, such as increasing our sampling size, performing other alternatives such as substantive analytics to try to get to our level of assurance at that point. Okay. Again, the next point, materiality, I kind of touched on that. A typical benchmarking materiality for municipalities would be the 2% of the lesser of revenue or expenses, and typically the benchmark is to say that every municipality has the objective and goal to have a balanced budget. So we use this, and 2% is the typical benchmark, and I think it's around 215,000, where if we have accumulated errors, that if we identified an error, management did not want to change it, if that total error was greater than 215,000, we would then have a qualified statement, which means that we would have to bring to your attention saying it's not a clean opinion, but we don't have that this year. Okay, so that's the whole concept, materiality and the unadjusted differences, right? So we've noted an error, management did not want to change it because it's either too much work, and they felt that they had enough room that they can kind of change it in the following year, or they just had difference of opinion. Okay. Next on here, we can move over to the audit results. So the audit results here. So this year, our audit findings report, we wanted to bring to your attention kind of where we thought the high risks of the audits are for municipality, and kind of how what our perceived risks are, what our responses are, and whether or not there were any significant findings that were identified as a result of our audit procedures. So cash and cash equivalents, typically the cash, one of the inherent risks of cash is always subject to fraud, right? It's always subject to the inherent risk that it could be stolen. So cash also represents a significant balance of the town's assets. So as part of our audit responses here, we look at the controls. We know that there's appropriate segregation of duties when it comes down to people performing the bank reconciliation, people doing deposits, people doing the check runs going to depositing it at the bank. We also obtain a bank confirmation at the end of the year to ensure that the balance that's recorded in the GL also coincides with the bank statements. And we also do verification of bank reconciliation and subsequent event cutoff testing as well. So after performing those procedures, no significant findings were identified for cash and cash equivalents. You'll notice that in 2019, our cash did go up around $1.4 million. Now, this is a variety of things. Last year, primarily, there was a huge receivable that was expected from Big Lake County with regards to capital funding. So what had happened was the town paid for those capital projects ahead of time, so it was sitting as an accounts receivable. This year, we received it. Okay? So that's kind of one of the reasons why cash has such a big discrepancy this year. Because last year, the town funded it. Right? We were waiting for that cash. So last year's cash balance was a little lower. The other things that play into the effect of cash is the timing of accounts payable and accounts receivable. Accounts payable this year is a lot higher, right? So if our AP is higher at the end of the year, that means we didn't utilize the cash until subsequent to the end of the year. So it's just a timing issue in terms of where the cash positions are compared to prior year. Receivables, one of the key risks with accounts receivables is valuation, is whether or not the receivables, we know that it exists, but whether or not it's collectible, right? And one of the risks that we have here is, with COVID-19 and some of the receivables that are kind of extending over past, like 30 days or 60 days is that receivable still, the valuation of it still accurate? Now, the MGA does indicate that receivables does not need to be written down as long as the receivable balance is not greater than the assessment value of the property, right? So that's part of our procedures for some of the receivables that are kind of getting up in size. The duration is actually, getting over past, let's say, 90 days or 120 days. We're looking at the assessment for some of these outliers to ensure that at least it's not higher than the assessment. And if it is higher than the assessment, we would have to do a write down up to the point of what the assessment value is. And that's in accordance with the MGA. Okay? So we've tested, in addition to that, we've tested subsequent receipts of receivables balances outstanding at the end of the year. So if there's a receivable, let's say Big Lake County for $400,000, this year, because our audit has extended all the way in September, by September of 2020, we should probably be able to confirm that we received that receivable. So subsequent event testing has allowed us to confirm some of the bigger ticket items that it was received subsequent to year end. So the receivable as of December 31st, 2019 was legit, and it's good. Okay. Our receivable this year went down. Again, this is related $1.2 million Big Lake County grant. It was for the 17 and 18 portion of capital projects. In 2018, we accrued for this receivable, which was received in 2019. So this is one of the biggest discrepancies that you have for receivables. Okay. Okay, so deferred revenue. So deferred revenue is definitely probably where we're going to see the biggest variance between budgeting and cash accounting to accounting and public sector accounting standards. Deferred revenue really relates to we are given some sort of grant that has external restrictions on it. We'll get the cash, but we can't recognize it as revenue unless we spend it in accordance to those restrictions. So if we haven't fulfilled any of those restrictions, it still stays as a liability. So this year, so one of the biggest things is that we look at the additions of new deferred revenue coming in. So MSI, Big Lakes County, any grants that are coming in, we look at the additions and we have to verify kind of the agreements to kind of make sure that with MSI we know what it is every year. This kind of correlates with tangible capital assets, right? So we've submitted an SFE to build, let's say, rehabilitation of a highway. Okay, great, we got the funding. Now we look at the tangible capital assets. Did we spend it? Right? So if we spent it, we can recognize the revenue. So part of our response is that we will review significant funding agreements. We test mathematical accuracy of deferred revenue continuity schedule. So this year, this was one of the areas where we had to spend a significant amount of time on because the continuity schedule is something that we rely on to start our audit testing, right? So the continuity schedule is supposed to start with the opening balance, and it's supposed to indicate what are the additions of grant funding that was utilized, what was the grant funding that, what was the grant funding that was obtained in the year, what was the grant funding that was utilized, which would correspond to the revenue that was recognized. So we worked with Dave McReynolds, and also with Rita to try to kind of obtain, there's some complications, but at the end of the day, we finally got the numbers. We were able to kind of match the movement of the tangible capital asset additions in the current year, along with the funding that was obtained. So, as a recap, this year, it's $1 million for deferred revenue versus 2018 was 1.5. So the discrepancy for MSI. $1.26 million was related to the lagoon, the rehabilitation of the 55th and 56th Avenue, and the water treatment plant. Federal gas tax was around $170,000 for the airport and curling rink, and Big Lakes County was $430,000 for the lagoon rehabilitation, 55th and 53rd Avenue. So that's kind of how deferred revenue kind of plays, and again, it's strictly a financial statement reporting, financial reporting instrument that will differ from your budgeting, because budgeting typically is when it's cash come in, right? And it's also kind of throws off, and we can talk about it in terms of how a municipality 1 year all of a sudden has a huge surplus, right? Again, I don't want to get into too much detail, but under public sector accounting standards, we can be given a grant, say, for a water treatment plant of $1 million. So the $1 million, if we spent it on a water treatment plant, we spent $1 million, what happens is that the cash comes out and we record $1 million as grant revenue because we spent it. But the problem is that the amortization, the water treatment plant gets recorded as an asset, which is on the balance sheet. So then what happens is that you have $1 million of revenue. Let's say you amortize that $1 million over 10 years, you're only going to record $100,000 of expenses. This is where you're going to have, you're going to show a $900,000 surplus because the revenue recognition of grant and the recognition of the expense aren't one for one. Again, this is a public sector accounting standard. So this is where the reserves come into play. How, although there's a $900,000 surplus this year, but if that's all because of capital grants, that's not necessarily a surplus that you guys will budget for, right? Because in your mind, you have $1 million and you spent it on a water treatment plant, you're net zero. So your budget shows that you guys are actually on a balanced budget, but yet the audit financial statements under public sector accounting standards says that there's a $900,000 surplus. So this is kind of where the differences will play, okay? Moving next, accounts payable. Biggest risk of accounts payable is have we fully accrued everything? And when I mean accrued everything is, again, difference between cash and accrual accounting is although, let's say we have contractors that are doing work for us and they never invoiced us on December 31, They invoiced us on March 31, 2019. But that invoice contained of work that they did from November to December of 2019. Well, that needs to be accrued, because public sector accounting standards requires that if the work was done and there was a liability that was created, the town needs to accrue for it regardless of when it was expensed. Okay, so biggest risk for when it comes up to accounts payable is, do we have everything right? The completeness assertion. So our response to that is, we look at subsequent event testing. So we'll perform subsequent event testing. So even though it's March, we'll look at some of the bank statements, any amounts, transactions that are above our thresholds. We'll select the samples to verify whether or not the actual invoice and the work that was performed, was it related to 2019 fiscal year or was it related to the following fiscal year, okay? For accounts payable here, increase in accounts payable, 2018 was $878,000 versus 2019 was around $1.5 million, primarily related to capital projects at the end of the day. So 2019 definitely had a bit more activity going on for capital projects, which related to the actual accruals that we had to do at year end. Long-term debt, there hasn't been any changes. So the decrease in long-term debt has primarily been related to the principal repayments that's been happening. So that's pretty consistent from year to year. Government transfers here. So again, I think I skipped one. Tangible capital assets. Okay, so tangible capital assets, this is going back to our water treatment example here. Our focus on our audits here are, the biggest risk is, does the asset exist? Is it valued appropriately? And is it in fact an asset? Okay. So what we do here is that, again, this is another continuity schedule that has been in the works many years. Just because the town goes through so many transactions in a year, right? And for us, we rely on a continuity schedule where we look at the opening balance, which should tie into prior year's audited balance. We look at any additions that has been incurred. We look at any disposals. And any of these amounts that are over our threshold, we would then select these for testing purposes to ensure that, yep, they're reported to the right department, they're actually supposed to be an asset, and they're amortized properly. So once we confirm the addition of disposals, we would then also do a recalculation on the continuity schedule, which really is, opening balance, what's the change in the year, what's the ending balance, what's the amortization. So we do a recalculation of all that to confirm whether or not amortization is misstated or not, okay? No significant findings there. Again, we worked with Dave and Rita on this. You'll notice that the tangible capital asset doesn't seem like it changed much, right? 46.4 million versus 46.35 million. There was $2.2 million of additions of new assets that were added in 2019, but amortization expense, when we're amortizing wear and tear, the expense of it was around 2.1, which is why it was a nil, almost like a nil effect. It's not like there was no activity. It's just considering the addition and the amortization, you just netted out 1 for 1. Okay. Tax revenues, tax revenues and user fees here, we're pretty confident. We have a pretty sophisticated modeling to calculate tax revenues down to the penny. We're not, as part of doing the calculation, we also obtain third-party evidence with regards to the assessment values. This would be, the individuals that the town uses. We obtain their reports. We ensure that the uploads into the MuniWare system is accurate, it's complete. So once we've been able to rely on that upload, we would perform our recalculation of what the mill rates were approved by the assessment values, and we usually should come pretty close, and that was the case this year as well. So this is an example where the reliance of MuniWare as a software, the controls that are around, has helped us to be able to give you a level of assurance without having to test every single, because if we had to test, the property tax assessments on bit by bit, that would be a lot of work as well. Okay. Users fee as well. This is where we actually, we want to ensure that user fees are being charged accurately in accordance to, the user fee bylaws. So what we do during our interim, when we're doing control testing, is, we go into MuniWare and we look at the master table to ensure that, the rates that are included are in accordance with the bylaw, right? And then during our walkthroughs, we would take random samples and verify whether or not the computer is actually pulling out the right rates. If we can verify that and verify one sample that, okay, I just took a random sample and let's say, for example, a rental fee. The computer calculated that properly. Because it's an automated control, we should be able to rely on that with that one sample. Okay, so that's the approach that we did. So again, user fees, not many significant changes from the prior year. Government transfers, so there's the operating and capital. Okay, so the capital relates to the portion that from the earlier conversation that I alluded to with regards to deferred revenue, getting external grants to spend on capital projects. Okay, so this year we recognized $1.8 million. So that meant that we spent $1.8 million and we recognized the revenue in its entirety. You'll notice that from the tangible capital asset, we I don't know if you recall, but we had $2.2 million of additional capital assets. So you're kind of seeing how primarily the asset additions for the town was funded by external grants, and that's where you see the 1-for-1. The ones, you know, we're off by maybe 300,000. Those are the ones that this year are funded by the town on its own. Okay, so now the amortization expense compared to the revenue, that's where the difference is going to be. That was alluded to earlier. So again, $1.8 million. This was related to the capital project we spent the current year. Operating, the reason why we're seeing operating, and you're going to see the differences in operating, government transfers for operating and operating expenses, is because of the rec board. So in 2018, we only had 3 months, right? From, I think it was October, November, December. 2019, we have the full year now. So we're going to see this year where for operating grants, for sure, is because in 2018 we only had 150,000 versus in 2019 we received 650,000 from the county's requisition. Okay, and that will then, for our next point for operating expenses, also why we also have a bit higher expenses this year, just because we're taking on the full year, and that's reasonable at the end of the day. Salaries and wages, always a key risk here is fraudulent employees, ghost employees. So what we typically do is we always verify the changes. We always test for additions. You know, when we're looking, we will obtain a listing of who are new employees, who were terminated, and that's where we actually focus our substantive analytics, because that was the change. And then once we've actually confirmed our testing, everything was added accurately, we have a substantive analytic from there. You know, in a perfect world, if there was no change, no new employees, we honestly can just take last year's payroll number and roll it forward, and if there's a COLA adjustment, just times that number, let's say by a 4% increase, and we should be fairly accurate, right? So that's why we just do the testing on the changes that happen currently. Okay? And again, management override of controls. This is always a very sensitive one. Again, an audit is not designed to detect fraud. It's not. So if fraud was to happen, no matter the audit procedures that I do, we can't detect it. So what we do is we assess areas that could be subject to fraud. For example, if someone has the ability to post cash, do the bank reconciliation, also do the check runs, write the checks, we have a problem here, right? Because that person, if the deposit back is $200, that individual can take $100, write $100 for the deposit, write $100 for the books, no one can ever catch it. So we always look to verify and see if we can provide recommendations where areas that we can segregate duties, right? So, for example, accounts payable, who's adding employees, should probably not have the ability to also have the ability to put in the EFT, right? Because what's to stop me from putting my own EFT, adding me as a payee, and just paying myself? So these are kind of the management overrides, and if there's segregation of duty issues and management override controls to the point where we can't rely on the controls, the financial statement is also at risk. So these are some of the reasons why we still do walkthroughs. We confirm what the controls are in place. The town, you know what, we have segregation of duties, although, you know, we weren't with the treasurer here today, but the roles within the Munyware are still dictated by these controls, by, you know, does the treasurer position have access to these schedules versus the property taxes access to these schedules. So those are still in place. So again, no significant findings based on our walkthroughs and discussions with that. So that's just a short summary recap of what we felt was some of the high-risk areas. You know, significant audit findings, deficiencies. Again, we're not here to do consultation on internal controls. based on our testing, such as dual signatures, the automated controls within UniWare, what we relied on, everything was working. Okay, everything was in place. Could it be improved? Yes. You know, and that's what our management recommendation letter is that we provide to management in terms of areas that, you know what, if you could, will help provide efficiencies and also effectiveness when it comes down to audit quality. This year, without a doubt, okay, COVID-19 was definitely something, but without the treasurer, it's the reason why we are here in September of 2020 trying to clear up the 2019. So yes, you know, we've also kind of this comment here of completion accuracy of year-end documentation has been a carry forward that we've provided in the audit findings report since 2015. It's very difficult to complete an audit, and I hope you guys can understand that an auditor is really only on site for a week or two to try to audit the whole year. The general source to start is usually that we have an audit binder where there's a lead sheet in place, so that we actually have focus to where we can actually start, you know, and we haven't been able to get that. I know things were kind of getting better, but this is one of the significant difficulties that we encountered, where it was continuity schedules that didn't really reconcile. Some of the subledgers never reconciled, so we had to do alternative procedures such as rollback procedures, or help management also try to figure out what the right numbers were. Okay, so these were some of the difficulties that we had. You know, this year, you know, 60 adjusting journal entries was kind of what we had, and this is very high for a municipality. Okay, and it's consistent with the prior years as well. This year was a little higher just because, yes, we didn't have a treasurer, and we understood that. Okay. I also, you know, like I want to acknowledge Rita. You know, she just kind of stepped in here in July, and she definitely assisted us. You know, we do appreciate Dave as well, but he kind of was more of a consultant rather than being here on a day-to-day basis. So Rita definitely helped us kind of expedite the audit so that we can be here today. So again, thank you very much for your assistance, and we definitely look forward to working with her and hope that we can create an efficient audit, a year-end package for us, so that it can be as smooth as possible. Okay. Now we do have some discussions. I know the council had information about the reserve continuity schedule. So again, in a nutshell here, what I just want to summarize is reserve continuity schedule. Ideally, yes, it'd be great to have. But in the prior years, even in the current years, you know, reconciliations, tangible capital asset, deferred revenue, working papers, those were kind of our focus because those had a material impact on the financial statements. Reserve continuity schedule is great. You know, when we looked at it, we noticed that the restricted cash was very similar to what the reserve continuity schedules are, and then we have some printouts of some of the lead sheets that we're dealing with, but accumulated surplus at the end of the day, what I'm trying to get at is that we never got this, but we knew that every year we were kind of on the deadline of filing it on time. So this is something that was along with our year-end documentation that we request, but it's not something I'm going to, I guess as an external auditor, die on because it doesn't have a net impact on the audit financial statements. Reserves, capital reserves, unrestricted, and equity and net assets, these three consist of accumulated surplus. We know what equity and net assets going to be because it's your net book value of your assets less your debt. The remaining differences that's related between capital reserve and unrestricted is a reclass entry between these two accounts. So although I do understand that on the budgeting side, it will have an impact, but for the audit financial statements, they couldn't get it to us. We're not going to qualify an audit because again, it has no net impact because it'd just be a reclass entry between unrestricted and capital reserves. So that's why these years we're trying to harp on the other working papers to kind of get up to speed. And if we have it, that'd be great. So that's what that kind of little excerpt is trying to explain, is that there's a lot other documentation that we would like along before with the reserve, but it'd be great. I think it's definitely something that on a month-by-month basis, on a budgeting basis, that management dealing with council, that this should be in place for sure. Okay. Management representation, management letter. On every year we do provide management letter. The management letter has been more or less a carrying forward from previous years. We can appreciate management has been very busy with kind of all the different stages. With the new treasurer, coming in. with the amalgamation of the rec board. So this management letter we continuously provide to management, and if we feel that they've actually addressed some of these management letters, we will indicate accordingly on our management letter that they have done so accordingly. Okay? Management letters and the audit finance report, this is available to council. This is available for you guys. You know, I know we provide it to management, but these are definitely available at your request. All right? Uncorrected misstatements. So this is what I kind of alluded to earlier about summary of unadjusted differences. You know, if we found an error and they didn't want to change it. Of course, you know, we might find some errors that weren't caught in the past. Instead of doing a prior period adjustment, changing the FIR, restating it, that's why some of these adjustments might be done in the current year, even though it should be done in the prior year, but it won't have a material impact. So the net amount effect for 2019 was $1,800. Okay, so this is what I'm saying. Although there's $1,800 that shouldn't have been here, it's not going to change your guys' decision based on these financial statements, and we don't need to worry about doing a prior period adjustment. We don't need to redo the FIR with municipal affairs. It's just to ensure that we can be as efficient as possible. Okay. The next few slides are just kind of detail in terms of some of what are the unadjusted differences that we found that related that basically summed up to the $1,800. So you know, I'm not going to go into huge details on those. The other matters to bring to your attention that's different on these financial statements is, again, because we're so late in the game, that there is a note disclosure with regards to subsequent events for COVID-19. So COVID-19 happened as of March of 2020. Because the audit hasn't been done yet, and technically we're required to do subsequent event testing even up to September 22nd of 2020. The reason why we need to have that note disclosure in there is that we have receivable balances, let's say $1.5 million, right? With COVID-19, you know, we could have a lot of corporations that are going bankrupt, right? So the reason why we need to put that in there is that there's still a level of measurement uncertainty that are subject to the risk of these financial statements. If people are relying on these like receivable balances, okay? That's all I have. Again, I'd like to thank management for their cooperation. Again, this was a tough year. What we got here. The next few slides on the appendix are pronouncements of asset retirement obligations, which is kind of the biggest thing that's coming into play. Now, the accounting standard boards has actually delayed any new standards applicable to any IFRS PSAP a year because of COVID-19. But asset retirement obligation is definitely something that I think management needs to look into to ensure that we're actually looking at tangible capital. It's no longer just landfill liability and closure and post-closure liabilities anymore. Asset retirement obligation is a standard from IFRS. It could be related to a building. So we have a building that has asbestos. The building has asbestos. We need to record some sort of obligation liability because we're going to need, there's an environmental standard that we need to clean this up, right? So this is unfortunately a bit more work for management, and then like I said, you know, we're dealing with this right now. We bought ourselves another year deferral, but you know, previous to the COVID-19 extension, this was supposed to come into effect for year ends of December 31, 2023. So this is something we'll be discussing with you guys in terms of how you guys can set your team up to start evaluating some of your assets. You might not have any, right? And as auditors, what we're looking at is what's your evaluation process through your tangible capital asset, which you're going to be going through your continuity schedule. What are subject to some AROs, and what are some engineering studies to confirm the fact of whether or not they do have some sort of obligation going forward for this standard. Sorry that was a little long, but that's all I have. And I open the floor to questions.
Okay, thank you very much for that. That was good explanation. So we'll throw it open for any questions and on the 2019. Right. Yeah.
Go ahead, Brian. Ask your question.
Okay. Well, I know one of the I guess it's going back to the roles and responsibility question that you identified. I mean, and this goes back to the issue that we were discussing previously is, I mean, we have a policy in place that says, you know, where our reserve money should be going into. We found out the money wasn't going in there the way it was supposed to be, but we weren't notified by you guys as our auditors. And from our perspective, if there's an issue like that, we would like to know about that and make sure that the policies that we're putting in place are being followed. And we never were notified of that. And I understand that, okay, yes, you know, from an audit perspective, you know, the assets are still there. So you're going, okay, it's okay. But I mean, you do other checks to make sure they're following the policies and there's proper checks and balances. But that's one that seemed to not get caught. And for us as a council, we count on the auditors to identify any issues like that. And I don't think it was caught or mentioned to us.
Yeah, so, you know, we do over 55 municipalities. And every municipality is basically going to have what are some of their areas of focus. Now, our area of focus, again, is with regards to public sector accounting standards, right? And I think, you know, I don't want to talk about, you know, I think, like, typically, you know, when we provide indications to councilors, what are some areas that, you know, because those charged with governance is council. You guys are council. You guys are the ones that are charged with governance here. And you, essentially, if there's areas that you would like us to look at, because I'll be honest, we don't review every policy that there is. It's not possible. You know, we're only here for 2 weeks. Policies that we review are primarily related to the internal controls that we look at. So, for example, if there is dual signatures, that's a control that we know we need to rely on for payables to ensure that, you know, payables that exist, they've been authorized. They have an effect on the statement of operations this year because it's an expense item. So we'll look at those policies and ensure that they're adhered to. In terms of the reserve policies, these are kind of the areas where, you know, I'm not saying, you know, like if this is an area of concern, like I have other municipalities that we don't look at those, you know, because this is within the accumulated surplus side of things. There's no net effect that's happening here in terms of the financial statements. When we came down to the reserves, you know, we have, like I have a copy of the lead sheets here, but we looked at the restricted cash balance in terms of cash that was set aside for deferred revenue, and we looked at cash set aside for capital projects, and we confirmed it with the bank that these balances existed. So as of December 31, 2019, we confirmed that what's actually on their GL is actually what the bank has. In terms of the reserves and stuff, like this is something that I would say is a little outside of our scope because we're just trying to provide an opinion in terms of whether the financial statements are misstated. Now, alluding to it, let's say if they didn't do a transfer, because, you know, keep in mind, we took over in 2015, and we can only rely on what the opening balances were that was audited by the previous auditors. But when we looked at the documentation, we obtained it, we never got a reserve continuity schedule as well. So we can only confirm that if there's any transfers happening in the current year, we can see that the transfers are happening in the current year. But like this, the opening balances, this is something definitely from a budgeting and for you guys, it's something that we need to look into. I'd be more than happy to say that, you know, we need to shift our focus and look into it. But will it have a net impact on the actual financial statements? No. In terms of the audit, right? Because public sector accounting standards, like if there's a reserve transfer, you know, it's just going to be taken from unrestricted and put into capital reserves, right?
I'm thinking of of other auditors, and it's not public sector, but with other companies, they do look and look at the policies, and you've mentioned some of them to make sure there's practices in place to make sure there can be no, you know, limited opportunities for fraud and that kind of thing. But for me, this is one of those policies that, should be, you know, front and center and saying, yeah, this is where the money should be going, and it's not going there.
So for us, in terms of like reserve transfers, right? Like typically we look for a motion. You know, that's definitely it. Where it's like, is there a motion from council to say, okay, after the year is done, we got a surplus of 500,000. We're going to put this towards capital reserves. So this is where we actually look at the minutes to kind of verify that we see these motions. But strictly from an actual audit perspective, like we verified it again, like what the cash amount is that was restricted. But at the end of the day, we also couldn't get a continuity schedule. You know, we couldn't get, and I, you know, trust me, we as part of our information request items, these are part of our standard things. It's just that if we can't even get the bare minimums, you know, when we first started here, like bank reconciliations were an issue. We had to still attend to that May 1st deadline, you know what I mean? So, and it's true, you know, like ideally, yes, if everything was smooth sailing, I would definitely like to focus on that. But my concern is getting the audit to ensure that it's not materially misstated and tackle the items that are high risk that we need to address so that we don't have to have a qualified opinion. Like that was my concern. And of course, there's many things, and I definitely open up the doors that if this is something for concern going forward, we will look into it. But if I can't even take care of A, B, C, D, which is primary, like, you know, like the primary concerns, like I couldn't even ask the treasurer for this because I was dealing with so many other issues in terms of trying to even reconcile the books in the first place. Right? So again, looking back, ideally, yes, I would have loved to, but there was just other things I had to deal with. You know, like biggest thing is, you know, reconciliation of the surplus. You know, like ensuring that the prior year numbers agreed to, I mean, the opening numbers agreed to our prior years. So when we're out on site for a week, when we're here at year end, typically that's under the assumption that we get a year end binder. Everything is referenced, additions, everything is tied to a lead sheet, because as auditors, we're not supposed to perform management duties. We're supposed to verify that based on the lead sheets tying to the GL, here's the supporting documentation, we verify those. So that's our scope of work, right? Evidently, you know, throughout the years, 45, 50, 60 adjusting journal entries, additional billings that we're billing you guys, like 25,000, that's the result that we couldn't just do an audit, right? Like we had to try to reconcile the books, again, trying to get to that May 1st deadline for you guys, you know, so, and again, I'm not, I will say, you know, I wish I looked at it. It was definitely a query that we talked about, but when I talked to the previous partner, like there's bigger fishes that we had to take care of. And looking at the trend that we were, you know, that had happened for the town, you know, it was Earl, and then we didn't have a treasurer, and then Herman and Terry, and there was a lot of kind of discrepancies going between management. I definitely did not, the audit findings report, the letters that we have every year, is supposed to be given to you guys, right? But I didn't feel that it was appropriate to, you know, kind of state the obvious in front of the public, you know, in terms of like management not getting there, you know, like administration is not able to provide us with this because it was kind of indicated on the audit findings report. That's why we're doing additional billing. Here's the additional adjustment journal entries. There's no year-end binder. And, you know, I'm not going to state everything that's missed because it just will extend it at that point, right?
So what I'm hearing is you weren't getting the information that you needed in a timely, organized manner. Every audit that we do, we need a year-end binder. That is the basis of how we start, because that's how we can start. But what happens with audits, and it can just spiral out of problems, is that if things don't reconcile, like I don't know how many have done a bank reconciliation, but if 1 month doesn't reconcile, you can't just try to pick 1 month. You have to start from the scratch and do it every month. As auditors, and even in our request for proposal, it's under the assumption that we would be given a year-end binder and we can do an audit efficiently. Yes, we understand that there will be 10 adjusting journal entries, 15 at most. You know, that's even considered high. But to do 60 adjusting journal entries, and sometimes that's why we have prior period adjustments, because there's some things that we can't cash because we're just here for a week, you know.
So the week here is not actually spent on primarily doing all audit work. It's actually trying to get the audit working papers to start that we needed to get it done.
Okay, so, and I guess, I know we had lots of issues before, and you know, one of them is the changeover of several treasurers over the, you know, the last few years. That's certainly added to it. We had the amalgamation of the rec department into the town, and that was another big issue. So we've had lots of, you know, issues there, and I think we knew that there were issues because of some of those changes that were appropriate, but we always thought that they weren't that big. I think just from our perspective, we knew there was some issues, and we always put them down to that. But if they're major issues that we're sort of hearing, we would like to know about them. And I'm glad you're being frank right now and saying that you weren't getting them. Because we need to hear that, and we need to make, and you know, we need to make sure that it's better moving forward.
And I at that point too, you know, we realized that there was pressures on. Okay, I don't want to say, you know, like the admin and then the treasurer position, just because, you know, there was a lot of pickup of many years of trying to reconcile things, right? So it was trying to, like, I didn't want to. It's not like I'm worried about calling people out. It's just that we knew that this was an issue. I didn't know if it was effective to try to kind of put salt to an open wound that I thought, and that was my problems, that I thought that was already known that it was an issue just through the additional billings, the adjusting journal entries, you know, and like I said, I think it's definitely warranted, and I would definitely love to have, you know, going forward, a meeting, you know, with council, whether it's in camera or not, to discuss these things, right? And typically with my presentations to other municipalities, when it's actually open to the public, we kind of deal with the presentation, but the in-camera is kind of to deal with more of the sensitive issues of management at that point. So,
now, is there sensitive issues that we should be discussing?
I think we've laid it out pretty well here. You know, without calling the names. At any time, I would definitely invite any of the councillors or yourself to call me if you guys still have concerns. Like, to me, at the end of the day, I know that there's no fraud. There was no malicious intent to try to, you know, cook the books or anything like that. I did see an effort, you know, aside from even, I think administration, one of the biggest things that we need to remember, and Nancy probably can attest to this, is that administration was also short-staffed. Like, there was a time where we didn't have a position, let's say, for a certain clerk here, right? So a lot of things were kind of done by, let's say, I don't know, by the previous individual that wanted to do everything. So it's a building process, you know, and I think that relationship is something that, you know, we also need to be sensitive to take care of. I'm not trying to hide anything. I definitely can be as open as to you guys as possible. I guess I just made the assumption that I thought that these audit findings reports were being given to you guys, because that's what I wrote on it every year, and it's addressed to council. Like, the audit findings report, so what we've done this year differently is that we took the audit findings there and I've actually made it into a report for you guys so that we can put a presentation. But the audit findings report is actually for council, right? Management letter we provide to management because it's the details that, you know what, we don't want to kind of get too bogged down in these, but it's always open for you guys to ask management in terms of what did the auditors say for recommendations. Did you guys actually address any of the recommendations that the auditors provided in the prior year? So that's all open to you guys.
Yeah, and I think I just want to, you know, thank Rod for the little bit of time, and Rita for coming in and trying to catch up. I mean, I know that there has been lots of work to get this audit done, and you guys to making it happen. So thank you for that. That's greatly appreciated. And I mean, I'm hoping that it can be much cleaner moving forward.
Likewise.
Go ahead. You'd mentioned one thing earlier I just want to go back to, and you talked about moving money out of reserves or into reserves usually requires a motion of council. Mm-hmm. So what happens if money is moved out of reserves without a motion of council?
Well, typically that's basically where, you know, we would we would question management because there's some sort of change, right, in terms of the reserves. So it'll basically go from capital reserves to unrestricted. Again, they're both surplus accounts at the end of the day.
But what if it gets moved into operating?
It can't.
Well, we're under the understanding in 2020, and this is moving ahead,
Right.
that administration moved some of our restricted, or some of our unrestricted savings sort of into operating,
Okay.
because of COVID issues.
So when we talk about reserves, we need to be careful
Yeah.
here, right? So the cash side of things between restricted cash and operating cash, that's fine. When I'm talking about reserves, like capital reserves, unrestricted surplus, and accumulated surplus, that's all happening in when we say surplus, it's kind of like equity, right? Equity is just to show if I don't know if you guys are more familiar with like for-profit, but like retained earnings. Are you guys comfortable with that term, retained earnings?
No.
Okay, so the general gist of accounting is revenue less expenses, and it closes out to something called your equity, right? What's left over? Okay, so when we're saying that there's these three accounts in your surplus and equity, it's just for your guys' budgeting purposes of, okay, I have $100,000. Where do I want to put it in reserves? But that amount has already flown through your current year income statement. It can't be put back because it's done. It went revenue, expenses, flowed into your equity. That's where the timing differences and budgeting differences is, because for your guys' purposes, when you're talking about reserves, it's a transfer of basically saying, okay, I had $100,000 in unrestricted. We had a great year. We're going to put it in capital reserves. Okay, so that's just a flick from unrestricted to capital reserves on the equity side, but your equity has still not changed. It's still $100,000. You just basically said, you just committed that amount for future projects. On the cash side of things, our audit procedures will catch that because we do a year-end confirmation, right? Our audit procedure will, when you say you move that $100,000 from your restricted bank account to your operating, when we do our year-end procedures, we verify that, okay, it's going to say now operating has $100,000 at the year-end. It's going to link to the bank statement, and then the restricted is going to have zero. So that's part of our procedures to confirm that it exists and the valuation is appropriate. Now, when you spend it, it's going to hit capital assets, for example, right? And the cash is going to come out. That reserve that you have, essentially, when it gets amortized every year, because you're going to have a negative cash flow. Let's say the only transaction you had is capital assets. You bought the thing for $100,000, and every year you have amortization expense, and amortization expense is $10,000. So on your unrestricted, and still in your equity, this year you're going to show a deficit of $10,000, right? But that deficit now gets flipped over to your capital reserve, because that capital reserve that was stashed away is to fund it. So you're net 90, but that is just only a surplus issue. Right? It has nothing to do with the statement of operations, because the statement of operations, which is where we're concerned about, is what happened in the current year in terms of revenue and expense recognition. Again, it is different from the budgeting side and the accounting statement, the statement of, public sector accounting standards. But that's kind of what I guess the big discrepancy is when I'm talking about capital reserves. Why? It's not like I didn't care for it, but there's no net impact on your bottom line of accumulated surplus, because that's our goal, is to provide an opinion on whether or not your financial statements are misstated or not. And it's not. Even if you didn't, right, and we didn't, we forgot to read the meeting minutes, and we forgot to do the transfer of reserves, your accumulated surplus will still say $100,000. It's just not in the right piggy bank within the reserves of your surplus.
I understand what you're saying, but and maybe I'm not understanding what our administration did earlier. Because of COVID and taxes being delayed,
Right.
There was a concern that there was going to be a lack of operating capital just to pay our bills. So they moved money out of reserves or out of the savings into operating to make sure we could keep funding it.
So if those...
And you had mentioned that anything out of that sort of accounts should be a motion of council, and we didn't make that.
Yeah, so like if we were going to take it out of reserves, right? So essentially then we would transfer, let's say we took 100,000, the reserves from capital reserve in the equity side, transfer it into unrestricted, because we're expecting in the current year that we're going to have additional expenses.
Yeah.
From the cash side, we're going to see it, and typically there should be a motion, because we're basically saying that we're removing something that was supposed to be committed into something else now.
Yeah, well, this was, I believe, almost all of our reserves, from my understanding, are in or they're not in committed accounts, right? It's
Well, we can definitely go over the leashes, but there is an account for restricted and an account for deferred revenue. So I know that. So I don't know if you recall, like the deferred revenue where we obtain grants, we haven't spent it yet.
yeah,
Those committed funds, I know from the previous treasurer, she specifically had a new account for that because they didn't want to confuse it with operating. So that money is put away, and we confirm that balance as well. So there's a deferred amount in the capital, and then an operating account.
yeah. But should there not be? I mean, according to our policy, we wanted to set aside money into various restricted accounts.
Yeah.
And from my understanding, we don't have those accounts. We can't see them.
And you know, with like for me, I think this is now the role of management, right? As the auditor, I don't really dictate, where it should be. I just ensure that as at the end of the year, what the bank statement says, because at the end of the day, we just report cash.
Yeah.
On the financial statement, it just says cash. It doesn't talk about the various accounts. Our role is, okay, the GL says that we've got $6.4 million. I got to prove it. So I've got the bank statements, and I'm confirming the existence. So that's where our roles and responsibility are. What you prefer to do with the money is a discussion between management and council.
I understand that.
Yeah.
I guess where and this is kind of that role, is if it's not being followed, our wishes the way we wanted it to be, we would like to be notified, because that was sort of where the gap was. We didn't realize that there wasn't all of these separate accounts. That was all going into more of an unrestricted account, and the money was there, but it wasn't divvied up the way that we thought it should be.
Yeah, and I guess for us, the only way that we will know is if this is an area of concern, please bring it to our attention in terms of what we only can read meeting minutes, right? And that's the most we can kind of gauge in terms of what does council want management to do. We're under the assumption that management is obliging to what council is saying, right? But our audit assumptions is the fact that if the financial statements is saying a number, we're confirming the existence, the completeness, and the accuracy of it, right?
So moving forward for 2020, if we want to make sure that those accounts are accurate, what do we do? How do we make that happen?
So we every year we're going to send an inquiry with those charged with governance, right? We talk about what were some of the general inquiries of how was your experience with management? Was there any areas of risk that you perceive that happened in the year that you would like us to kind of focus on, and bring it to our attention, right? Through your monthly meetings with management, what are some of these big ticket items that happen? That's where you can bring it to us, and we would definitely need to kind of talk a bit more and correspond to ensure that we understand kind of, like what specifically you want, for us to kind of hone in on. That's kind of where it is. Or when we commence, we're always going to do an audit planning report for you guys, where we present, like this is our areas of risk, and usually it's pretty standard at that point. There's some municipalities where they're like, we have some concerns about expense claims. So can you please kind of look at expense claims and do that? And these are kind of like side things that we will add to our scope. And that's kind of how it would be, you would be able to communicate to us.
Okay.
Okay.
All right, Councillor Gilroy.
Just to put this at rest, you have said that everything balances out. There's no problems in that sense, which would include your assessment of the total reserves. So if our reserves have gone down, it's because we've overspent. Would that be a legitimate thing to say? That we've not done the reserve, we've not managed the reserves the best way possible because you've been able to find that we've everything is balanced out every time you've done your audits?
Yeah, so we've been able to confirm the cash side of things, right? In terms of what's kind of sitting in the cash and what exists. In terms of, the allocation of reserves between unrestricted and capital reserves, that's where we're still waiting on management to provide us with this continuity schedule so we can kind of figure out what these balances should be. And it would just be a reclassification between unrestricted into the capital reserve account.
Okay, so we may not have overspent, we just may have put it in the wrong spot and can be reclassified later.
Exactly, right? And
Okay.
so that's where I don't know the conversations that Dave had with you guys. We weren't really privy to that as well. But it's something where I would like to kind of get some clarity on. But this continuity reserve schedule is also going to go all the way back. Like, I don't know when was the last treasurer that did it, right? Because these balances carry forward from year to year. So the most that we can do is looking at the motions of what you guys are saying, okay, we're going to actually transfer this amount to reserves, right? So our opening balance of the reserves might be at jeopardy. So this is going to be a pretty tall task to kind of recreate this continuity schedule for the reserves.
Councillor Rose?
So just for clarity, Noel, are you saying that since you've been our auditor, not one treasurer or during that time administration hasn't provided you the continuity schedule?
No. And even when we reviewed, because we were required to review the prior year audit's file as well, right? Like, this is something, we couldn't find it, right? So we know that the number is not wrong between unrestricted and reserve. We just don't know how much of the pie needs to go where, right?
So that'll be a decision our council will have to make because it's all in one pot, so to speak, now, and we'll have to split it out and what would be reasonable. And we have, some commitments to, like our fire department on what's supposed to be in there, based on, our intermunicipal agreement and those kinds of things. So we need to get that nailed down.
As a recommendation, I think instead of trying to focus on what the right opening balance number should be, I think just like you alluded to, right? What are your commitments that you have right now? Work backwards in terms of what that number should be, right?
Yeah, there's no use going back trying to figure it out. It's just saying, okay, here's the pie. What do we want to move into restricted, and where do we not want to keep in unrestricted?
100%. Yep, definitely.
Other questions? Donna? No. Ryan? Arlen?
So you feel our team is up for that challenge right now, you think?
I hope so. No, it's been great. I'm looking forward towards the conversations with Rita. Her expectations of what a year end is. We had a chat about that. Definitely in line with what we expect it to be, but we'll wait till this. We're probably going to need to start planning for an interim right now after we're done this one, and then we'll kind of go from there, right? And I am very eager to be able to just say, this was the year. This was the first audit that I put him on, and like I said, it's from the first time from 2015, it was a challenge, and it started getting better and better and better. But yeah, I definitely want to ensure that we're communicating to you guys, and I think this was this is very productive on both ends for us. So definitely. So yes.
All right, well, thanks again for coming down and taking the time to go over it. I think I understand better now, and I'm hoping we're dealing with a lot of tax dollars and public money here. We want to make sure it's all properly accounted for, and that's really our goal. And so, if you see anything that we are not as a town or things that we need to clean up, please let us know, because we want to make sure it's being done as best it can. We want to protect the towns and the ratepayers' money, for sure.
And from an auditor's perspective, that's great to hear.
Yeah.
Perfect. Well, again, thank you again on behalf of our firm, and yeah, we're looking forward for 2020. report back to you guys of all the positive feedback. All right.
Thank you. Let's take a 10-minute. What's that? Oh, yeah, we have a motion on the floor. Thank you. Yes, we have a motion to receive the both the consolidated and the non-consolidated audits. No other questions? No? All in favor? It is carried. Thank you for reminding me. Let's take a 10-minute break and we'll continue on with the rest of our meeting.